Hey everyone, welcome back to the Mark Loeffler Experience. We got Andrew Hines here again, and it's your monthly update, I guess. We seem to be doing this every month, or thereabouts.
Yeah.
And we're going to be talking all things Canadian real estate.
Sounds good.
What are you seeing out there?
Well, Mark, I was catching up on your last video, and I was wishing that we could have debated right there and chatted about it because, there's a lot of the same going on in Canada, like across the board. We're seeing sales come down a bit, but we're also seeing inventory down and sometimes at far lower than 5-year averages.
Yeah.
So the problem is persisting here. We're seeing a real lack of supply, and that issue isn't going to go away no matter what we do to demand.
Well, and so if you guys didn't catch the last video, basically I was arguing that, I was reading from two reports. One was a TD Bank report, one was a Scotiabank report. The Scotiabank report was basically saying we have a systemic problem in Canada is where we do not have enough housing, and we are not building enough housing.
We're not building enough, right? So I know we've talked before about the municipality issues. We've talked about the fact that it's tough to get building permits. It's tough to get approval to develop new areas. But there's more than that,
and the fact that we're green belted, and we have a lot of NIMBYism, not in my backyard, so we don't want to go. You know, the whole point of the green belt was to densify, right? That was the whole point, was to put more density on less space to protect our green space and our farms, and which I'm all for. But we do need to go ahead and then densify. But we don't have a partnership between all levels of government. But that's honestly not why we're
those are inefficiencies for sure. So we can get into some specific stats if you want.
You guys comment down below. Is this why do you just come to hear Andrew and I talk? Because these are my most watched videos. So I mean, basically what's going on, you guys have probably seen it all out there, is the fact that like prices are down, right? Prices have come off their highs, which we kind of talked about this back in March and like February, March, April. We were talking about this, that, I mean, we basically saw a 10% increase in prices between January and February.
Yeah. And
a 10% in 1 month increase it's unsustainable.
Absolutely. So there had to come down a little bit, and I think what we saw and the trend that we were hearing from different realtors, the word on the street was that there were less bidding wars. So, and that's the emotional factor, right? If you take that emotional factor, the people that are just so attached, they've lost out on 5 houses, if they have less bidders that they're competing against, they're more likely to get the house that they looked at and less likely to get frustrated and pay too much. So I think we're seeing a little bit of that happening, but there's still that lingering supply issue.
I'm going to put this out there that, just what's on the screen right now, you can see it. So there's a 9.55% difference from January to February. And then another, 5.5 from February to March. That's like a 15% increase in 2 months. Yeah. Like, if we saw that over 3 years, I'd be super happy with the real estate market. So obviously there had to be a reversion to the mean. Mm-hmm. So like you look and you go, okay, from January it was 618, and now it's 660. To me, that looks like, okay, we've reverted back to the mean.
We'll never fully get there, though. I don't think. Personally, I don't think we're ever fully going back to, say, where we were.
Oh, no, we're not going to get back.
March 2020.
We're not going back.
Yeah.
But I'm just saying.
Coming back to the mean.
So the mean is basically what I mean. So it's government policy to inflate the money supply, inflate the housing, to have that go up over time. It's just government policy. And again, with lack of inventory, that's what's going to have to happen. Right. But basically, you're going to see a price scale like this, and that they want it to stick to that price scale. So it's going to pop up, it's going to pop down. So I think we popped up, and then I think we popped down. I think my prediction for August is we're going to see a slight price increase in overall value. So
we've been trending a little bit down. You think we're going to come back up?
Yeah.
I'm predicting that more for fall. I really do think, you're going to have that normal cycle, because in any normal year, we typically do have a little bit of a trough in July, August, because everybody wants to go on vacation. We've had a really nice summer, so I don't blame people.
Well, here's the thing that most people aren't talking about is this is the second best July ever for home sales.
Okay.
Like, it's not like it was like this horrible thing. It's just, it sucks compared to 2020 because well, we didn't have a spring market, and a lot of the sales from March and April got pushed into June, July, August. So yeah, the sales are going to be down.
Mm-hmm.
But nobody's talking about is that it's the second best year for sales ever. So there's still a heck of a lot of homes selling out there, and people aren't listing right now.
Yeah. So we're elevated over the 5-year average on the sales, but we're still following that trend where we're troughing a little bit now, even though it is way up overall. And then I think we're coming back up again.
Yeah.
In the near future.
I honestly don't think we're going to see 10 to 15% or 10% increases. It's just not sustainable.
It's not sustainable, and there's that same affordability issue that we've talked about before. There's only so far that prices can continue to go up before people can't afford it.
Right. But I mean, the government will take credit, or whoever will take credit for this coming back, and they'll say, "Oh, it's it's the new stress test that we put out in July." Which, I mean, we'll link the video that I did on that one, saying basically it's a bunch of crap. It's not going to do anything, and it didn't do anything last time.
But it's just another measure to affect demand. All the government seems to be able to do is just try to affect demand, either tax it or do something to try and control demand without addressing the supply issue and creating efficiencies there that are going to allow us to build more units.
Well, and I mean, I guess that's what it comes down to. And I mean, we're going to be broken records for a long time, I think, because I don't see anyone really taking this on a national, a provincial, a municipality level very seriously.
No, not really. And then beyond that, there are layers to the issue too, right? Just getting labor. We were just talking before we started the video, is that it is getting harder to get labor. And then, of course, no one's really encouraging young kids to get into the trades. So this problem is probably going to become more exacerbated over time.
Listen, if you're 17, 18 watching this video and you want to become a plumber or an electrician, you can, basically start an apprenticeship today and be making 50, 60 grand your first year. And then by the time you're out of that 4-year apprentice, which they've paid you to do, you're making 100 plus a year, and you could probably own about 5 or 6 rental properties by that time.
Exactly. Whereas the other people who go to school until they're 22 at least, or 21, 22, and then they're coming out with a load of debt, and they're still starting at 50 and still having to learn street smarts, right? So while you're working in plumbing or in one of those trades, you can learn the street smarts. You can learn how to invest from people by going to networking events. For me, with my kids, I'm going to go the other way. I'm not telling them to go to university.
I don't care. Well, my kids are probably going to go to university.
If they want to, they will. But
I mean, I don't care what they do. Like, if they want to go into the trades or they want to go to university, my whole thing is you got to learn how to invest.
Yeah.
Like, that's my biggest thing is, hey, go learn how to invest, learn how to trade options, learn like real estate investing, just learn the numbers. And they know that. And the biggest thing I teach them is how money works.
Right, which is not taught in school.
Like, I'm still flabbergasted when I used to go out and speak. That's coming back. But when I used to go out and speak, I'm like, well, you guys understand how money works and how banks make their money. And everyone's just like, and I'm like, how do you not know this? Like,
yeah, well, I learned that in economics when I took it at school. Like, there's few programs at school that really do teach you life useful things that are going to help you in the real world. But I would say, business economics degrees help.
Yeah. All right.
Not to get tangent, but we
digress.
We always do, but I mean, that's why people come here.
Is that why people comment down below? Is that why you come here, or is it just for my pretty face? Or hey, if it's like the last video, I got tons of comments about my singing.
Oh yeah, I heard that. That was good.
Yeah. I'm not going to sing for you now. So they do talk about, obviously, that and this is the tale always, is the two biggest markets really affect the pricing.
Right.
Which is being Toronto and Vancouver. They skew the national average by, so I think it's 660,000. If Toronto and Vancouver were taken out, it's like $120,000 or $130,000 difference.
Oh yeah.
So you're talking about what, $440,000, $430,000 for the national average. But you can see, like, I'm just pulling up the chart here, where the average price of properties in Vancouver, and like it jumped. That was the 10%, and now that's come back down. So I don't know, the markets that I work in or where I'm investing, they seem either flat or slightly up.
Right.
even since like April.
Yeah, not as volatile as these major markets. What do you make of that? Why do you think it's so volatile?
It's a great question.
I don't have a very good answer for that.
I don't have a good answer for that either, other than the fact that maybe that's some of the push of trying to get into, like we saw this before the last stress test.
Okay.
Where,
push to get in early, and then that levels off.
And then it dove down after, and then basically it went reverted to the mean, and over time.
Okay, so that makes sense. So people were anticipating stress tests coming in. They bought a whole bunch of properties. Now that goes away.
I mean, so what I know that in January, February, there's always a shortage of inventory. Since I've been a realtor for 12 years, there's always been a shortage of inventory. And then March comes along, and everyone lists their property, and they sell whatever they do, right? They buy and sell their properties in March, and then April, May, there's residual, but it's not as much as March. And then people are so done by June, July, August that again they go out, and so the supply goes down again, and less people look, and we're seeing that like supply is way down. But I mean, I got 4 or 5 buyers right now that have been outbid, I don't know, 4 or 5 times already. Right.
So average home buyer, is there anything to conclude from that, or any wisdom that you could take from that and actually use to be profitable?
So you want to be buying in June, July, and you want to be selling in the other months.
Selling in the other months? But you don't really want to be selling in December, per se.
Actually, December's not a bad time.
Not as good as, say, March, though, right?
I think, February, March this year were some of the better years. But typically, I see in like January, February, is, again, all the buyers are there, but there's not as many sellers.
Okay.
So typical years, it might be 0.5% difference.
Yeah.
I mean, so if you can do that, if you can buy it in these off, like in the summertime, you're going to, like if you had bought, again, like this month or last month, you might have, so in May and June, we were buying things and we were getting conditions on properties. We were negotiating deals. There weren't as many bidding wars. There were still some, but you saw 2 to 4 offers. We're seeing 10 to 16 to 20 offers again. Like in starter homes in Hamilton, right?
Okay, so you know better than I then. So August is picking up again. Yeah, because in my experience, it was always, like you said, July was a little slower. August was the slow month. Everybody was on vacation in August, that's why I'm surprised to hear that it's picking up so much now.
I think so, but the problem is the inventory again.
Yeah, inventory again.
So, I mean, after September 1st, or after Labor Day, are we going to see inventory pick up? I mean, I certainly hope so. Just from my sales business. Yeah, I don't know, right? Like, it's one of those things where it's like, did we have that rush through the spring market? I mean, we started seeing this in end of May, June, where some of the buyers were getting some fatigue and that type of thing, right?
Yeah, so Mark, I was just noticing a trend. I was watching a review of the different cities in Canada and what was happening, and we thought prices last year were high, and consistently in some of the major cities were 20-30% above last year's average sale price. And just looking at the all of Canada year-over-year change from July 2020 to 2021, 18.1% across the country.
Well, no, that's 18.1 in Toronto, and then 15.6. Okay. So it's funny though. Like I just had Greater Vancouver up here, and like they're only 13%.
And I would say that makes a lot of sense because there was that huge exodus from the major cities. Like a lot of people wanted to get more space, especially with the lockdowns happening. Well, so that made a little bit of sense at least.
Well, that's why I'm a little surprised with Toronto being up the 18% right now, right? Yeah. I think so. We're starting to see people come back into condos, move back with opening and stuff like that. I mean, that's really driving some of the growth too, right?
I wonder if when it locks down again, if we'll actually see that come down again.
And just for myself personally, this is I want to look because I'm buying stuff out there. Edmonton only had a 7.2% change. Yeah,
it's been a slower market. I really like what Alberta's been doing in general. Even Calgary, I think, has now returned to all-time highs in average value.
Well, they're up 11% year over year, right? So, I mean, Alberta again bringing down the average.
Yeah, still bringing down the average, even though they're at all-time highs, which is why I think it's such an opportunity compared to other Canadian markets.
Yeah, Winnipeg. I mean, it's August and they're still in winter there, right? So
get there 2 weeks of summer.
Yeah. They had it the first 2 weeks of August. Is usually,
So 12%. Yeah, I mean, not as astronomical. I think some of the other lower markets, though, you will still see that 20-30% if you can, micro niche down into the smaller areas.
You want to micro niche down? Let's
like Windsor. What's Windsor doing?
Well,
right
look
now?
at this. Yeah. Have a look at that.
Yeah.
I mean, Pancroft area,
there you go.
55%.
My point. The rural areas further away from the major centers. I think they've seen astronomical.
Too.
Yeah.
Like that's wow. Let's check out another cottage market. Because we were looking at them before back in the spring, and they were up, 40 something. Oh, there's 41% in Kawartha Lakes.
There you go. Right, and that's my analogy of the water going to the lowest spot when there's all this pent up demand. People can't afford in the cities. They're like, okay, well, we can travel, we can work remote.
Well, a lot of that is
and cottage.
We can't travel.
Yeah, and we want cottage properties, which I've seen. Yeah, anecdotally up in the Sable Beach area, just things have gone insane up there. Properties have gone, from low 300s to 500, 600 in year and a half.
Yeah, and I'm just flipping through these. So like Oakville, 24%.
What's Windsor doing?
Let's check out Windsor. Good old dirty. 30%, 29%.
Right. So Windsor's still on that trend.
But here's the thing: that's come down though.
Yeah, they were like 35.
They were like 35, 36%.
But keeping in mind that is a month to month, month of last year to month of this year.
That's right.
Yeah.
So it's year-over-year average.
Yeah.
Let's see what the Montreal is doing of the world. Okay, 23%.
Yeah.
These are all good numbers. 55%. So there's got to be a reversion to the mean there at some point. I would, unless it was.
Yeah, all things held equal, yes.
Yeah.
It's the other factors that we can't necessarily factor: political decisions, new economic changes. There's so many factors, which is why anyone asks for a prediction, we can never give one.
Yeah.
We can do our best, but.
Well, I predict that in the outlying Ontario markets that we're going to see a slight bump month over month in prices.
Yeah. We've been saying this all along. Yeah. We expected rural markets to go up, and they continually have. Not to toot our horns here, but we've done well.
It seems like Toronto's is catching up though, and some of the cities are catching up now that we're open, right?
Yeah, yeah, it makes sense, and hopefully it stays open. But if it doesn't, I think that we're going to see another kind of dip back down towards people wanting to leave.
I don't think we're going to close it.
I hope you're right.
I really hope I'm right. Greater Moncton again, 40%. Check out good old St. John's again.
Halifax is insane right now, by the way.
Well, you say that, but it's not as insane as.
Just for lack of inventory. They've just had this huge inventory problem.
Well, saying that, so I was talking to somebody yesterday. They just bought a duplex in Dartmouth for $150,000. Mm-hmm. Now, from what I know, I've never actually been there, but anecdotally, somebody's told me that Dartmouth is not the best area.
Okay.
So I don't think they bought in the best area, but they're going to go out there and live there because they bought it $150,000 cash. They rent out half. They make some money. Yeah,
it's all relative, right? Like no matter what, if I'm coming from a higher price market going to a lower price, it's going to seem appealing. Even if that market's up 40%, I'm still going to say, wow, my dollar goes further here. And I think we've seen that across the board in Canada. People making moves. A friend of mine is actually just making the move out to Calgary. He's wanted to buy a house, start a family, and they figured there was better opportunity there. They're moving.
Yeah.
All right, Mark, so what do you think is going to cure this problem? Is anything going to cure this problem? Or are we just going to have to live with prices going up 5-10% a year every year?
I think prices are going to go up every year.
That much?
I think 10% is a little aggressive.
But that wouldn't be anything new in the last decade.
No, but I think historical averages run to the 5%. And I think we're going to revert to the mean. And I think there's going to be a housing shortage in places that, don't put limitations on growth, put limitations on development until there's an accord between all levels of government and support to, say municipalities that, hey, we're going to pay some help. We're going to help you put some infrastructure in place so you're not charging maybe these huge development fees, or we're going to help you streamline the process of getting the builds in, and we'll give you some more money for that. I don't know if throwing money at it's the answer most times, yet there has to be some give and take. Again, just on various simple issues, there's no accord between municipal, provincial, and federal government. So this is a bigger issue. So is that ever going to come to effect? And I think like you're seeing this out in Alberta, where you see a 7% year-over-year increase in, say, Edmonton, but it's a lot more free out there, right? Like it takes a lot less time to get development permits. You know, the density, they are going denser. They don't have the land use restrictions. So, I mean, that's one of the deterrents. One of my deterrents for actually investing out there was this. But obviously I went ahead and done it anyway. So I'm still looking in Ontario, even though the prices are ridiculous, because I think there's those issues in place, and I don't think they're going to get fixed easily. So I still want to buy more stuff in Ontario because I think it's going to do super well because
those issues aren't going anywhere.
Those issues aren't going anywhere. So
yeah,
at the end of the day, say it's become because I'm a realtor or a real estate investor that I'm telling you to buy real estate. Sure. Or you could just look at it and say, hey, well, this guy looks at the facts and makes business decision based on that, not airy-fairy stuff. So, I don't know.
Yeah, absolutely. Well, you're in this business because you believe in it, right? No one can really effectively sell things they don't believe in, right? So real estate, it's a great niche for you to be in. I often contemplated getting my license as well, just because, obviously, where else can you build wealth like this?
Yeah, and it's not even because I'm a realtor. I think about this more because I'm a real estate investor.
Yeah.
And this is why I do all this research, is because I'm a real estate investor. And you
want to know for yourself, right?
And I'm a bit of a geek this way, but yeah.
Yeah, absolutely. And I'm with you on the issues in Ontario. I don't think they're going anywhere. I think that as cities get more and more developed, they just add more and more red tape. And we're going to see that out west too. But if you get those unincorporated townships,
I hope so.
I
hope so.
Selfishly.
I hope when I get my 200 units out there that then all this red tape comes in, nobody can build anymore. That'd be beautiful. I don't think it's going to happen in Edmonton, though.
Awesome.
All right. Thanks, everyone, for joining us. Comment down below. If you got something you would like Andrew and I to talk about, leave it down below. We'll get to it, and we'll comment. We're pretty good at responding to most of the questions and that down there. So thanks, everyone. See you next time.